Michael Roomberg, oil has come up from 45 to around 54 in the past week. That's helping a lot of stocks you like over at Miller Howard, including Flowserve. Why don't you talk about that one?
Yeah, thanks, Greg. We like Flowserve over Miller Howard. The stock's down about 30% from its peak. In the 2008-2009 financial crisis, when oil dropped from about 140 to 30, the earnings dropped by about 10% during that period. Yet the stock's down by a much more significant magnitude now. There's about 40% of the business that comes from break and fix business, where a pump or a valve breaks at a infrastructure plant facility. Company gets the call and it's recurring revenue. So there is a natural buffer in the business to oil and gas cycles. And in addition to that, a lot of the business comes from midstream and downstream companies, which are a lot less exposed to the upstream and what's happening in the drill bit.
And you're also a fan of Valero Energy Partners. This is VLP, not the refiner VLO. Tell me why you like this one. It's been fairly volatile.
Correct. So a lot of the refiners in this country, Greg, they have midstream and ancillary midstream infrastructure, transportation assets that service their refineries. They're not core to the business. And in a MLP structure, they're much more valuable than they are in the C Corp structure, which is what the VLO entity is structured as. So the VLO is trading roughly 5 times EBITDA. These businesses in an MLP structure can be bought by the MLP at about 10 times EBITDA, and it's worth much more in that structure. So there's a dramatic incentive for a company like VLO to drop down these assets into its MLP, and we see a tremendous growth runway as a result. VLP today has about $75 million in EBITDA. VLO has indicated to the market that it intends to drop down about $1 billion of EBITDA, so there's a long runway for low volatile, attractive growth.
And then finally, you're a fan of Pioneer. Now, they're a producer out in the Permian. Clearly, all the producers have been hit by oil's drop. Why can they push through this downturn? Why will they outlast a lot of the other ones?
Well, we're enthusiastic also, as well as you are, about oil coming back up from the bottom here. We're not so sure that it's sustainable. What we like about Pioneer is the great balance sheet. These guys have done a great job of shedding non-core assets. They're now dominant players in the Eagle Ford, the Permian, in the Rockies. They are about to monetize an Eagle Ford midstream asset for about $3 billion potentially. So they have a fortress balance sheet. So whether it's a V-shaped recovery on oil or a U-shaped recovery, these guys are going to emerge in a much better position once oil does recover, as it's got to.
All right. Thanks a lot, Michael.
You got it. Thank you.
And thank you for watching The Street.